Hello and welcome back. So, in this particular session, we are going to see how you can calculate the product cost and the profit margin. So, let me share my screen here because product cost and profit margin needs to be calculated. Then only you can get a control of okay, are you moving towards profit, or is any of the product or any of your activities causing more uh, you know, overheads for you? So let us see how you can calculate the product cost first. Okay. Now the product cost is the total expense that is incurred to produce your chocolate. When I say total expense, it includes the ingredient cost, packing, labor, overheads. Let us look into each one of them in detail. Say, for example, you want to calculate the ingredient cost. How will you start? First and foremost, list all the ingredients that are used in one single batch of chocolate and their costs. Break it down into cost per unit of chocolate. Say, for example, cocoa bean, if cocoa bean is costing 500 rupees per kg, then if you have used only 200 grams, you have to calculate the cost for 200 grams, which is coming to around 100 rupees. If the sugar per kg is costing 800 rupees for you, and if you have used only 100 grams, then the cost is 8 rupees. So like this, you have to list out all the ingredients that are used in making a single batch of chocolate, a single type of chocolate, and their cost and unit cost. And add up all these to get the total ingredient cost per kg of chocolate for that. Say, for example, if you are making cashew chocolate, then list out all the ingredients that you are using for making cashew chocolates and add it up, and that is going to be the total ingredient cost per kg for cashew chocolate. Do it separately for other types, say like raisin chocolate or truffles or designer chocolates. So whatever chocolate types you are making, calculate this ingredient cost for each variety separately. If you are using dark chocolate, cashew, we talked about cashew chocolate. If you are using dark chocolate, then the cost is different. For white chocolate, it is different. For milk chocolate, it is different. So calculate and keep it in an Excel sheet. Next comes packing cost. It includes the cost of packaging each unit of chocolate. For example, if a box cost 10 rupees per piece, I know that it is not 10 rupees, but just for example's sake, I have put 10 rupees here. So if a box is costing 10 rupees per piece and the wrapper is costing 2 rupees, then the total packaging cost per unit is going to be 12 rupees. Likewise, labor cost. It includes all the labor involved in producing each unit of chocolate. So this can be calculated by dividing the total monthly salary of all the employees by the number of units produced in a month. If you do not have any employees, then also you have to give a salary for yourself. So let us assume monthly salary is 20,000 and the units produced is 1,000. Then so the labor cost is to 20,000 divided by the units produced. in case if it is say like you are taking just 10,000 rupees a month and you are producing 1,000 units of chocolates a month, then your labor cost per unit will be 10 rupees. So that's how like you calculate. Now come to the overhead cost. Overhead include utilities, rent, office supplies, equipment maintenance, any software or subscriptions that you're using for business purpose, all marketing and advertising expenses, license charges, permit fees. This also include permit means say like FSSA certification, whatever fees you are spending for getting FSSA certification, that comes under license and permit charges. That is overhead cost. All transportation and logistic cost for purchasing the ingredients as well as for sending the chocolates. Miscellaneous costs like bank charges, your credit card charges, debit card charges, waste disposal. If you are paying your corporation any amount for waste disposal, you can include that under the overhead cost. Learning and training charges, say like you are training your employees or you are upgrading, say for example you are learning this course, so whatever charges the fees for this particular course you have spent can be included under overhead cost for your business. In consultancy services or legal services that you are availing, yeah, I'll put legal also here, all that come under overhead cost. So you calculate what all overhead cost you incurred in one particular month and the number of units produced per month and divide the monthly overhead cost by the unit produced per month. That will give you the overhead cost per unit. Now add up all these to get the total product cost. The total ingredient cost plus packing cost plus labor cost plus overhead cost will give you the total product cost per unit. Now that is not over. Now you have to move on to the selling price. How will you determine the selling price? So before you decide the selling price, you have to decide on your profit margin. How much profit margin you want to take out of this business? Is it 50 percentage? Is it 35 percentage, 30 percentage, 100 percentage, 200 percentage? You have to decide how much profit margin you want out of this. So anywhere from 20 percentage to 200 percentage is what is found in this industry, depending on the value that you give, um, the speciality of your chocolates, the how much labor work is included. Say for example, if you're doing some handiwork or making some designer or 3D chocolate with lot of extra input, or if you're carving the chocolate and all, so that includes lot of labor, right? So you can put a greater profit margin there. So first you decide what is your going to be your profit margin, and based on that you have to calculate the selling price. Say for example, if you choose 50 percentage profit margin on each unit, then the profit will be total product cost. We calculated earlier, right? Total product cost into 50 percentage, which is your desired profit margin. That will give you the profit. Now, selling price is the total product cost plus the profit. So you have to add profit to the total product cost. Then only you will reach at the selling price. This is how you do the calculation. Now, we talked about the profit margin. It has a gross profit margin. This is one term which you need to understand, and it depends on the selling price. Gross profit margin is selling price minus the total product cost, which is the profit, divided by the selling price into 100. So in the previous example, I've given an example here, you can see. So that is how you calculate, and you can create a simple Excel sheet for this and keep it, so that once you calculate all the product cost and your profit margin and selling price and all, it will be easy for you to add up and quote your customer, even in case if you are getting a wholesale order or a huge order, you can calculate it accordingly. Now, there is another factor which you have to include, that is called GST in India. Normally, it is 18% in India, but again, like the GST rate differs from chocolate to chocolate. Say, for example, if you are using cashew inside the chocolate, then the GST will be different. If you are using milk based filling, then it is different. So it is always better you refer to the latest rates from the GST Council website, or you can talk to your chartered accountant to know what is the rate that you can apply it and add it to the cost. No, the selling price plus GST. So this is how you calculate the product cost plus and the profit margin. I hope it is clear. If you have any questions, post your questions in the comments, or you can ask in our weekly live coaching session. So you know what is the assignment? Yes, the action step for this session is sit and do the calculation of your product and the profit margin. First, list out what all products you are going to offer, and then calculate it and share a screenshot of that Excel sheet inside the WhatsApp community and the FB group. So see you inside the next session. Happy cost calculating.